Welcome, e-learners. In this video, we'll see the income from house property. Under the head of income from house property, the charging section is under 22. Um, Under section 22, the annual value of any property constituting any building or land or apartment thereto of which assessee is the owner is chargeable to tax under the income from house property. Thus, the following 3 points must be considered for computing the income under this head. The property should consist of building or land or apartment thereto. The assessee should be the owner of the property. The property should not be used by the owner for the purpose of any business or profession carried on by him, the profit of which are chargeable to the income tax. As a deemed owner and deemed owner, house property income is exempted from tax to certain persons. One self-occupied house is occupation of an ex-ruler. Income from farmhouse, property income from local authority, property income of approved scientific research association, property income of sports association, property income of registered trade union, property income of political party, income from house property as a charitable purposes. Determination of annual value. The basis of the calculating income from the house property is the annual value. How the annual value is calculated. The expected rental value or the actual rent received for the full year, whichever is more to be taken. Expected rental value is calculated as follows. If the lettered property is not subject to Rent Control Act of expected rental value is fair rental value or municipal rental value, whichever is higher. If the lettered property is subject to Rent Control Act expected rental value is fair rental value, municipal rental value, whichever is higher, or standard rental value, whichever is lesser. Unrealized rent. Unrealized rent means the rent or not paid by the tenant to the owner of the same shall be deducted from the actual rent received from the property before computing the income from the property. Reduction from the net annual value. Standard reduction under section 24. Interest on loan under section 24. Income from self-occupied house property. The annual value of one self-occupied house property is taken as a nil. From the annual value, only the interest from the borrowed capital is allowed as a deduction under section 24. The amount of deduction will be either the actual amount accrued or rupees 30,000, whichever is less. When borrowal of the money or acquisition of the property is after 31/3/1999, deduction rupees 1,50,000 applicable to the assessment year 2002 and 3 and onwards. So this is how we calculate the income from house property. A gross annual value less municipal taxes, and we will get the net annual value. From that we have to deduct less deduction, standard deduction, and then we have to minus the interest on borrowed capital, and we can get the income from house property. Interest on borrowed capital. Interest on borrowed capital is allowed as a deduction if the capital is borrowed for the purpose of construction, purchase, repairs, renewal, or reconstruction of the property. The following points are relevant for this purpose. Deduction is available under the accrual basis. Interest on arrear or unpaid interest is not deductible. No reduction is allowed for the brokerage or commission for arranging loan. Interest on fresh loans taken to repay the original loan taken for the above purpose will be allowed as a reduction. If interest on loan paid to any person who is non-resident in India without deducting, such interest is not deductible. Interest on pre-construction period. Pre-construction period means the period commencing on the date of borrowing on or the date of taking loan, whichever is later, and ending on 31st March, immediately prior to the date of the completion of the construction or date of purchase, date of the repayment of the loan, whichever is earlier to be taken. Period of allowing deduction. Interest on pre-construction period will be accumulated and claimed as a deduction over the period of 5 continuous years in equal installments, commencing from the year of completion of construction or the year in which the property is purchased or acquired. Interest on post-construction period. Post-construction period means from the beginning of the year in which the construction is completed and continue until the loan is repaid. Period of allowing deduction. Interest on the post-construction period will be fully deductible in the relevant previous year. Thank you.